Okay, let us start this example of ours. So your typical question would ask you to use the information that you've got to prepare a cash flow statement. Alright, so question 1 here says use the income statement and the balance sheet provided to complete the cash flow statement. So your information normally would consist of an income statement, a balance sheet, and notes. Right, so it will either be a combination of all three of those or only some of it, but the whole point of doing the first two financial statements that we did in term 1 is so that you can use that information to do the cash flow statement. Alright, so let's look at the information that they've given us. So first off, they've given us an income statement. So you are very familiar with this income statement. It's an income statement you've done plenty of times. Right, so they've given us that. They will also give us a balance sheet. Now here, your balance sheet, they will always give you 2 years figures in the balance sheet, right? Because you need to compare your previous year with your current year. Now as you look at this information, you have your current year's figures and you have your previous year's figures. Now this is like a tip and something that I would suggest you do, because it just makes interpreting all these things and finding your amounts a lot easier. So when you receive your information, at the top of your previous year, so let's just go through this again. This is the figures that you've ended with on the previous year. These are your figures you've ended with at the end of this current year, right? So the end figures for your previous year will be your beginning figures in your current year, correct? So what I would suggest you do is I would write at the top of this previous year's figures, I would write beginning. So I know that's my beginning of my year's figures. Let me just fix this there. Damn it. Delete. Cut. Try again. Okay, beginning. Right, and then at the end of, at the top of your previous or your current year's figures, you will write end. Right, so you know this is the beginning of the year, this is the end of the year's figures, and that will just make things easier as you go along to interpret your information. I just want to change these things because I don't like that. Okay, let's go, yeah. Okay, cool. So if you do that, then you'll know all of these figures is the figures at the beginning of the year, and these are all the figures at the end of the year. Right, just a nice little tip to do because it helps you out. You'll see when we do this example now. Right, on top of our balance sheet, they also give us additional information. So in this instance, they didn't give us notes, they only gave us additional info. So let's just run through this additional information. So they say, included in trade and payables. So in this trade and payables amount here, these amounts, 4,300 Rand is included in respect of SARS income tax at the beginning of the year. So you know that this is your beginning of the year figures. We wrote it up here. Okay, so we know that part of this figures at the beginning of the year, 4,300 Rand of that is for SARS, right? And at the beginning of the year, and then 2,130 Rand is outstanding at the end of the year. So we know that part of this amount is that 2130 is included in that, because this is our end of the year figures. All right, so I just want to highlight this for myself so we can get back to it later. But what I want to show you another tip to do. Okay, so we know that these two things are for SARS. Right. So sometimes we forget that about this additional information here when we're running through these figures. All right. So what I would suggest you do is just make like a little note or something here by trade and payables that, okay, something is like my additional information has bearing on this. I need to just, when I get to this, just look at what happened to this trade and payables. So later when I'm using trade and payables, I'll see this little indicator here and I know, oh, okay, something has to change with these two amounts here because of my additional information. If you have another way of remembering it, that's fine, but sometimes we forget that there's additional information here that we need to include, and then when we use these amounts, our figures are wrong. So I just normally make an indication here somewhere, right? This amount needs to change in some way or another because there's information pertaining to it. All right. Then the second information we get is the dividend on ordinary share account reflects a total of 10,000 Rand. Thereafter, the directors declared a final dividend at the end of the year. All right. So you know by now that this figure here, when we declare dividends, in the interim dividends, we declare and we pay them. And at the end of the year, we declare another amount for dividends, right? You'll remember it from your dividends general ledger account that you did last term. Okay, so we know here that the dividends are changing, that there's 10,000 Rand interim, but they didn't give us the amount, the final dividend that we've declared. All right, so we need to know that we need to kind of work that amount out somewhere. Okay. Then the last one, it says land and buildings were purchased during the year. No other fixed assets were purchased or sold. So in this case, these people, this company only purchased land and buildings. They didn't sell anything or didn't purchase anything else. Right, so they only bought new land and buildings. Okay. So let's move on. Let's go to your answer sheet. So your answer sheet would look something like this. Okay, so this is the face of your cash flow statement. As you will see here, as you remember from our notes, the cash flow statement consists of three main components. We have the cash effect from operating activities, cash from investment activities, and the cash from our financing activities. Those are your three main activities or components of a cash flow statement, right? And then your operating activities is made up of cash from operations, interest, dividends, and income tax that you paid. Your investment activities is made up of any assets that you purchase, any assets that you might have sold, and any fixed deposits that matured. So you'll remember all of these entries from the notes that we did in the beginning. All right. And then your financing activities, again, you can finance through shares or loans. So that's what these are in for. Proceeds from your shares issued, proceeds from taking out loans, and then if you repay your loans, it's an outflow here for the cash. All right. We'll see here the net change is something that we're gonna calculate. You will also remember from the notes again, the whole purpose of a cash flow statement is to work out this net change in our cash. All right. So you will also note that there are notes that you have to complete. Note number 1, note number 2, 3, 4, and 5. And then you have to fill in all these amounts in order to complete the cash flow statement. So let's move on to note number 1. We'll start with 1 and then we'll complete each of them individually so we can complete this cash flow statement. Alright, so let's move on to note number 1. Note number 1 is your cash generated from operations note. Alright, so here's what the note looks like. Okay. So let's start at the beginning. It says here, what is my net profit before tax? Alright, so you know, where do we find the net profit amount? Correct, that's in the income statement. Alright, so it says here net profit before tax. So then I go to my income statement and I look here, what is my net profit before tax? Alright, 37,500 Rand. Do you agree? Right, so we can put that in there, 37,500. Alright. Then we have to make the following adjustments for depreciation and for interest expense. Okay, so what this just means in this note is we have to go and put back the depreciation and the interest expense that we had in our other financial statements. Right? Again, these these amounts we will find in the income statement. So this whole first portion of your note you find in the income statement. Right, so we go to the income statement, we look for where's depreciation. Right, there's depreciation, 9,800 Rand. Okay, so we're going to put that in there, 9,800. No, not there, sorry, there, 9,800. Okay, and then our interest expense, we also find that on the income statement. So we're going to go, yeah, what was my interest expense? 1,600 Rand. Okay, we're going to put that in there as well. Then, and this is very important because people forget this all the time. The moment you write this interest expense in here, right, you have to go to your cash flow statement and you'll see there's a portion here where you also have to write out interest paid. Okay, you've paid interest. We know also from the notes that every outflow in our cash flow statement needs to be written in brackets, right? So the interest we've paid is money leaving the company, so we're going to have to put that amount over there in brackets, and that was 1,600 Rand. Okay, we put that in there, and then we don't forget about this. Like, there's no point, we won't get confused. That's why the moment you do it in your note, you go up and you go and put it in your income statement, right? You'll also probably realize that we didn't put the interest here in brackets. It's because we added here because we're adjusting for it, and we're subtracting it over here in our cash flow statement. So these two cancel each other out, right? So we have a zero balance here, but then in our information, our interest is still listed in our income statement. So you will add it to your note and subtract it from your cash flow statement. Right. Then all these amounts added together will form your operating profit before your change in working capital. So let's go and add all of those up. Okay, we have 37,500, we add the 9,800, and we add the 1,600, and we get 48,900. 48,900. Let's just check, is that correct? Yes. Alright. So now we know this is our operating profit before our change in working capital. Then we have to take the effect of our working capital into account before we can get the total cash generated. Alright. So our working capital consists of our inventory, our receivables or our debtors, and our payables or our creditors. Right. What this means is what change was there in my inventory, what change was there in my debtors, and what change was there with my creditors. Alright. Those changes will add up, and that will be your total change in working capital, and then we can finish the note. Alright. So you'll see here, these are, so the information here, I've put this here for you to kind of, it's not how it's going to be when you get a template in an exam format. You have to know if there's an increase or decrease and whether or not it goes into brackets or not. Right, so this is actually quite simple if you just understand how this works. So you will know that, and I'm going to say this plenty of times, that everything that's an outflow of cash in your cash flow statement needs to be in brackets. Alright, so let's look at inventory. If my inventory increases, right, what that means is at the beginning of the year, my inventory was a certain amount. At the end of the year, that amount's now more than it was at the beginning of the year, right? There was an increase in my inventory. If there's an increase, that change must be put in brackets, okay? Why do I put that in brackets? Because if my inventory increased, it means I spent more money on buying more inventory, right? And if I bought more stuff, spending more money, that money left my bank account, which means there was an outflow, therefore it will go in brackets. So if there's an increase in my inventory, I spent more money on the inventory, so there was an outflow of cash, so it will be in brackets. Okay, if my inventory decreased, it means I didn't buy a lot of inventory anymore. Okay, so I sold more inventory because that amount decreased now, which means there was an inflow of cash because I sold more inventory. Make sense? Okay. Then with our debtors, so when you have debtors, you know that you are selling on credit to them. So if your debtors increased from the beginning of the year to the end of the year, that means that you sold more stuff on credit, right? When you sell on credit, they don't pay you immediately. So there was not an increase in your cash flow, right? There was a decrease in your cash flow because your debtors increased, if that makes sense to you. So you sold more stuff on credit, you didn't get the cash for it. So although your debtors increased, that debt increased. But that was not an increase in your cash flow, that's a decrease in your cash flow because now you're not getting that money in. You have to use your own cash to buy stuff. You don't have your debtors paying their accounts. Therefore, if your debtors increase, it also goes into the bracket because it's an outflow of cash. When your debtors decrease, it doesn't go in brackets because it's an inflow, because if your debtors have decreased, it means your debtors have paid you. When they pay you, that money came into the bank. All right. And in creditors, as you know, it will be the opposite, because if my creditors increase, it means I bought more stuff on credit. I didn't have to pay them, so I didn't have money leaving my bank account. Therefore, I consider that as an inflow of cash. It doesn't go in brackets. If my creditors decreased, it means I paid them as I should have paid them. But when I pay them, money leaves my bank account. Therefore, there's an outflow of cash. So if my creditors decrease, that change goes in brackets. Okay, so let's look at these so we can get our amounts over here. So let's look at inventory. So these amounts we will find in the balance sheet. Okay, inventory is an asset. Here we find inventory. So in the beginning of the year, my inventory was 45,010. At the end of the year, my inventory is 36,340. You'll immediately notice here that there was a decrease in inventory. All right. So let's just work this out before we do the calculation. If there was a decrease in my inventory, it means that I sold more. So will that be an inflow or an outflow of cash? Yes, correct. That will be an inflow. All right. So let's work out what that change was. Right. My inventory went from 45,010 to 36,340. Okay, so that difference, it decreased by 8670. Is that correct? Doesn't look correct. Let me just double check this. Minus 36,340. Yes, 8670. Okay, so there was a decrease in my inventory. I expect it's an inflow of cash, so it's 8670. Okay, we don't put it in brackets because there was a decrease in my inventory. Okay, which means I sold more inventory, which means money came into my account. Then my receivables or my debtors, also you will find that in your balance sheet. They trade in other receivables. Okay, again, we will see that our receivables went from 11,540 to 16,580. So again, it's an increase in my receivables, right? So my debtors increased. If my debtors increased, it means I sold more stuff on credit, so that is an outflow of cash. So let's work out what that change was. It was 11,540 to 16,580. So there was an outflow of 5040. So you've probably noticed now, like your shortcut here, this is already a minus on your calculator, so you know that it must go in brackets. Alright, 5040. Let's go, yeah, 5040. Okay. Then my trade and other payables, or my creditors. Right. And you see, that's why we make this little note here, because now we know, oh yeah, something has changed and we can't just look at these things over here. Alright, so we know that, yeah, part of trade and other payables is the 4,300 Rand in terms of SARS income tax and 2130 at the end of the year. Okay, so we know that this amount, 4,300 Rand, is included in that. Okay, so we have to first subtract that before we work out the change. You agree? Okay. Where am I? Over here. Also important though, I forgot to mention it, whenever you do these transactions over here, you need to show me your bracket. So how did inventory change? Alright, so how did you get to this amount over here? And then you just show me your brackets. How did you do the calculation? Because when you mess up over here, you can still get marks for doing your brackets. Alright, I'm going to do the brackets here for the creditors now that I remember. Okay, so where am I going? Over here. So we know that 2560 minus the 4,300, that was still part of those payables. Okay, because we only want to know our creditors, we don't want to know the SARS stuff. So 2050 minus 4,300. That's correct, right? Yes. Okay, minus 4,300 Rand. That's the first portion of it. Okay, and then I'm going to minus this year's figures, which is 28,950 minus the 5,130, because part of that amount is, this is included in that amount and we need to take it out, right? So 28,950 minus 2,130. Correct, right? Yes. Okay. So now I can work this out. So let's go to my calculator. I said 20560 minus the 4,300. Okay. And then I will minus 28,950 minus 2,130. Okay, so there was a decrease. You must go in brackets because it's in minus, so it's already tells you it must go in brackets. Okay, so 10,560. Just double check this. The payables increase, so no, can't be that. Increased, it must not be in brackets. Okay, let's clear this. You will notice that although there was a minus there for creditors, it doesn't go in brackets because my liabilities increased. I went into debt more. So, because I still owe them more. I owed them, 16,000, and then at the end of this year I owed them like 26,000. So, my debt to my creditors increased. Okay. And then we can just calculate this to get our total cash effect over here. So again, you take your calculator, you go 5670. It's in brackets, so you minus the 5040 and you add the 10,560. Okay, that gives you 14,190. 14,190. Right, and now I can add these two amounts to get my cash generated from operations. So I already have that amount. Just add the 48,900. That gives me cash from operations 63,090. Right. And then I've worked this amount out now. So now I can just go and put it into my cash flow statement. So here by note number 1, I'm writing 63090. 63090. Good. Next is the interest. We've already put that in when we did the note. So let's move on to dividends paid. Okay. So we'll skip number 2 here, but we'll get back to that later. And you'll see also why we don't do this note right now. Alright. Dividends paid. Alright, so first thing we do is we take our amount from our financial statements. Alright. Now this amount, you will know that it's normally found on the notes to your balance sheet. Right, it's not found on the income statement, it's not found in the balance sheet. This amount is found in your notes. Right. More specifically, it will be found in your retained income note. So if you look here, this is what your retained income note would look like. You see here, here's our dividends on ordinary shares. It's made up of our paid dividends, our interim one, and then our final dividend that was declared. Right. But we don't have this note in this example. They didn't give us this note. So we need to now work this dividends out. Okay. How we do that is by doing the TAccount. Right, so then we go out here. So for us to be able to calculate that amount, we need to do the TAccount. Right. You will remember this TAccount from your test and term 1 work. Right, so your dividends on ordinary shares account, you will have over here your interim one that you have already paid. Because you've paid it, the description is bank. Okay, and then the final one that's been declared, you will remember you still owe this to your shareholders, so it is shareholders for dividends. Right, and then the total will be the amount that goes to your statement, because over here that gets taken to the appropriation account. This should make still be familiar to you. Alright, so let's look at our information. They told us that our interim dividend is 10,000 Rand, but they didn't tell us how much was declared. Right, so we can put that in. 10,000 Rand, what was declared and paid. Right, but how much did we promise our shareholders that we will pay them? So this is easy. You're going to look, where is your shareholders for dividends amounts? Right. So if you look here on your balance sheet, that's where you'll find it. Here is shareholders for dividends. Let me just take this down. Okay, shareholders for dividends. So you know, at the end of the year, that's why I said you must make these things. You declared, as I say here, thereafter, at the end of the year, you declared a final dividend. So at the end of the year, I owed my shareholders 5,000 Rand. That means that I declared to pay them 5,000 Rand when next year starts. Alright, so my final dividend that was declared is this 5,000 here, because that's the end of the year, which is these figures, and it's how much I still owe my shareholders. Alright, you'll see here, I've paid them. So end of last year, I owed them 10,000 Rand. That's why when this year started, the beginning, I paid them that 10,000 Rand. Our TAccount shows that. Now, at the end of the year, I owe them 5,000 Rand, which means that's the final dividend that I declared. Right, so I can put the 5,000 Rand in here. That means my total that should be on my financial statements, the total that would have been in my retained income note is 15,000 Rand. Therefore, I can go and put that in there. Okay. Quite easy, right? Also, this amount must be in brackets, because if I've paid this over to my shareholders, money left my account, which means there was an outflow of cash, right? And then also everything you calculate, you need to show me the brackets. So how did we get to this amount? That's how we got there. All right. And then dividends at the beginning of the year. So that's just easy. These two figures will be your shareholders for dividends. So how much have you paid them, or how much do you owe them at the beginning of the year? How much did you owe them at the end of the year? All right. If you look at this, and that's why I said again, beginning, end. So at the beginning of the year, I owed them 10,000 Rand, which I then paid. All right. So my balance at the beginning year was 10,000 Rand. Why is that thing there? All right. This amount also goes in brackets because remember, I've already paid this 10,000 Rand. My information told me that I paid my interim dividend of 10,000 Rand. This one has not been paid yet. So this has been paid, this has not been paid. Right. So my balance at the beginning of the year was 10,000, which I paid. It was an outflow of cash, therefore it goes in brackets. And then my balance at the end of the year, as you see there, was 5,000. Okay. Very important, this doesn't go into brackets because I haven't paid this yet. Okay, it's the end of the year. I'm only paying this again next year. So I do not put this in brackets because it's not an outflow. It's considered an inflow because although I owe my shareholders that money, I haven't paid it to them yet. So it's still in my bank account. It's considered an inflow, right? Then take the calculator again and just calculate this. Let me just move it over here. So we have 15,000. So it's in brackets, so it's minus 15,000 minus 10,000 plus 5,000, which means I paid my dividends of 20,000, which left my bank account because these are amounts I've already paid, but this was an inflow. So you see it's two outflows and an inflow, which gives me a balance of minus 20,000. Right. Happy? And then this amount we just take to our notes because it was note number 3. Take it here to my cash flow statement. It's 20,000 in brackets because it's an outflow. Everything that I pay is an outflow. Alright. And then number 4 is the income tax paid. So let's go down here. Right, so this note it says, what is the amount in the income statement? So this thing tells you, what is your amount for income tax from your income statement? How much is that? Then I go to my income statement. I look, where is my tax? It's over here. So we would normally write here income tax. They just wrote taxation over here. But my income tax is 10,540. And it's in brackets because I've already paid it. Right. So it's 10,540. Let me just double check. You know me and my dyslexia. Right. Then, what is my income tax balance at the beginning of the year and my balance at the end of the year? Right. So again, we know that income tax, okay, we had an adjustment for that where our additional information was here. Because the income tax we've dealt with this one on the income statement. Nowhere else on this information, except for our additional information, do we have anything about tax. Nowhere is there tax stuff here. So we know over here is my income tax. So we know at the beginning of the year, we paid SARS 4,300 Rand, okay, and 2,130 was outstanding at the end of the year. Alright, so in the beginning of the year, we paid them 4,300 Rand. Alright, so we go here, at the beginning of the year, 4,300 Rand, but it goes in brackets because we've already paid them. Remember, when the year starts, we have to make a payment. Okay. And then at the end of the year, they say here, 2130 was outstanding at the end of the year. So it means we haven't paid this yet. Alright. So this one, what was that again? 2,130. That one does not go in brackets because we haven't paid this yet. The money hasn't left our account. It's due to SARS, but when the next year starts, we will pay that, and then at the end of the year we see how much we still owe them. Right. So the amount on our income statement is we actually paid it. Our information said we paid them 4,300 Rand because it was payable. Okay. And then this 2130 was outstanding at the end of the year. So also, this is just another way with these notes, these two, your last entry will always be not in brackets because you haven't paid that yet, but the rest you would have paid throughout the year. So let's go here. We have a minus 10,540 minus 4,300 plus 2,130 gives me an income tax total of 32,710, and it must be in brackets. Let me just double check again. Yes. Right. And then we can take this amount to our cash flow statement. Okay, 32,710. Put it there. Okay, and now I've completed the operating activities portion, so now I can see what is the effect of my operating activities. Okay, take your calculator, and then we go 63090 minus 1,600 minus 20,000 minus 32,710 gives us cash of 8780. Okay, that is the note that takes the most time. It counts the most. Like this is, and you have to do this spot on, because if you mess up somewhere here, then your entire income statement or your cash flow statement will have some issues and you'll lose a few marks. So make sure that you know how to do this first portion. Alright, then we move on to our investment activities. Alright, so first thing we do is our purchase of assets. So did we buy any assets? Alright, so when it comes to this note, here's what this note normally looks like. Right, how much land and buildings did I buy? How much vehicles did I purchase? How much equipment? And then that will be the total that I used to buy new assets. Alright, you can only use this if they've given you the cost price of the new assets that you bought. Alright, but you'll see here from this information, all they said was land and buildings were purchased, and they told you no other fixed assets was purchased or sold, but they didn't tell you how much did you spend on land and buildings. Alright, so now if you look at your information, you will find this here. Here is your tangible assets. Alright, so that's all your assets in here. So, and here's the trick, and that's what a lot of people do wrong, and then they miss the boat completely. Some people look at this and be like, okay, at the beginning of the year I had this amount of assets, at the end of the year I had this, so if I just subtract these two from each other, that will be the amount that I spent on land and buildings. Right, that's most people's way of figuring this out. But if you do that, you will be completely wrong, and I'll tell you why. Okay, these amounts is your carrying value of your tangible assets. Alright, so if you look here, this is note number 3. Okay, this is a note you've done plenty of times when you've done it on the balance sheet and the income statement questions. Right, I'm just going to go to an example of one. Right, that note looks like this, and you will remember that when we complete this note, our main objective is to get the carrying value here of all our assets. Right, carrying value is cost price less your accumulated depreciation. So You can't go and take those two amounts from each other and say that's how much assets I purchased, because it's incorrect. If you look at this note, there's a lot of other stuff involved in this. And that is, like I said, those amounts are carrying value. So you can't just use them and like the difference between them. It will be completely wrong. Okay. So what do we need to do? When you have only carrying values, right? If they didn't give you how much you spent on those assets, you need to use this as part of your calculations, right? So these are included in your templates, so you will know how what to put in there. It's just about identifying these amounts. All right, so we've not been given the cost price, we've only been given carrying value. Okay, so let's work with these carrying values and try and figure out how much did we spend, how much did we purchase those land and buildings for. All right, so if you look at this note, your carrying value at the beginning of the year. So let's go. Beginning of the year, what is the carrying value of my assets? It's 105,000, correct? So let's go here. 105,000. Okay. Additions, we don't know. That's the thing that we now need to work out, right? We don't know how much we purchased those land and buildings for. Because we know we didn't purchase any of that, we didn't purchase any of that. Because they told us no other fixed assets were purchased or sold. Okay, so we didn't purchase any other land and buildings. But we don't know how much. Okay, so we have our carrying value at the beginning of the year. We have our carrying value at the end of the year. End of the year, there's our carrying value. 186,200. Okay, 186,200. Okay. We don't know what our additions was. We know that we didn't sell any assets. Okay. And then depreciation. Where do you find depreciation? In the income statement. Alright. Go up here. Depreciation 9,800. Okay. We put this in brackets because they says less minus asset disposal minus depreciation. So we have to put it in brackets. Okay. Now, the easiest way to work out this amount over here is to start with this note, start at the bottom and work backwards. Okay, and then as you know, you do the opposite of what is done if you would have worked from the top. Okay, so let me show you what I mean, but you've done this before, so you should be fine. You start from the bottom, so it's 186,200. Okay, so instead of minusing, so when you work backwards, you plus where you normally minused and you minused where you normally plused or added, right? So it's 186,200. You're going to plus the 9,800 and you're going to minus the 105,000. Right? And that gives you 91,000 of assets that you bought. If you put the 91,000 in there, okay, you know now that's how much you spent on land and buildings. So then you can go put it in there and you can finish this note. Okay. You can test this to see if you were correct by now just working the right way around. So you go 105, you plus the 91, you minus the 98, so just do normal ones and you'll get that. So then you know, okay, my calculations here is correct. Alright, we've done this backwards working before, so yeah, that's just, then you can know how much did I spend on the assets, the 91,000. So now I can put this at note number 5 in my cash flow statement. Where's note number 5? Over there, 91,000. Okay, I'm going to put this in brackets. Why? Because I purchased assets. So money left my account when I bought those things. Alright. We need to put this in brackets too because it's an outflow. Okay. So I was saying it again, and it's something you need to remember when it comes to cash flow. Every outflow is in brackets. It's in those notes as well. Okay, then where we at? Okay, proceeds from asset disposal. Okay, so we didn't sell anything, so we didn't make any money from selling the assets. Okay, because they told us we didn't sell any assets. And we didn't have any fixed deposit that matured, so no money came into our account from a fixed deposit. So we can finish this. Okay, our cash from investment activities is an outflow of 91,000. Right, then that one's done. Now the last component is our financing activities. Alright, so you know it's shares and loans. You'll see here proceeds, money we earn from issuing shares, money we earn from taking out new loans, and money we've paid, so an outflow of repaying those loans. So let's say the shares, the proceeds from our shares issued. So this you'll find in your balance sheet. Okay, so if you look at your balance sheet under your equity, because it's shares, you'll see here's ordinary share capital. Right, but in this example, there's something called a share premium. Right, so ordinarily this is not something that you will get in an exam, but they do sometimes put this in here. Alright, so what does this mean when there's a share premium? Okay, all this means is they sold the shares at a premium, and that's just a fancy way of saying they sold shares for more than the actual share value. Right, so the shares were valued at a certain amount, they sold it for a little bit extra, and that was sold at a premium. Right, so you would take both of these into consideration, both of these amounts. If the share premium was not there, then you would have just used ordinary share capital when you wanted to do the issued shares. Alright, because when you issue shares, that is ordinary share capital. Alright, so we know that we have to now take both of these amounts into consideration. So at the beginning of the year will be both of these, end of the year. So what was the change in both of those? Alright, so if you look at what was the change in my ordinary share capital, my share capital went from 100,000 to 100 in the beginning of the year. What am I doing? To 150,000 at the end of the year. Right, so there was an increase. I issued more shares. Right, so let's look here. It went from 100 to 150, so that is 50,000, correct? And then my premium shares was 8,000. It went to 15,000, so I issued another 7,000 Rand worth of shares. Right, do you agree? If you do that in your calculator, you'll see that it's 7,000. From 8 to get to 15, I need to add 7,000. Alright, you're going to add 7,000. Okay, so your total proceeds from your shares is 57,000 Rand. Doesn't go in brackets because it's an inflow of cash. Okay, then proceeds from our long-term loans. Did we take in new loans? Alright, so now we know that loan is a liability, so it will be under the equity and liability section. Okay, then we look, there's our mortgage loan. Right, at the beginning of the year, our mortgage loan was 10,000 Rand. At the end of the year, our mortgage loan is 5,000 Rand. So do you see that the loan decreased? It means if it decreased, we didn't take out a new loan, we actually repaid the loan because it's less now. Alright, so we know that there was no proceeds from a loan because we didn't take out a new loan, but we did pay back our loan. Alright, so if our loan was 10,000, it went to 5,000, we repaid 5,000 of it. Okay, because it's 10,000 minus 5,000 gives us 5,000 Rand. So we repaid 5,000 Rand on that loan. So then we're going to put the 5,000 Rand in there, but it needs to be in brackets because we paid back the money, we repaid the loan, and it's an outflow of cash, so it needs to go in brackets. Okay, and then you don't really need your calculator for this, but then we have to calculate our cash from financing activities. So it's 57,000 minus 5,000 gives me 52,000. Okay, so 52,000. Right. And now I've done all of these amounts. Now I can work out what was my net change in cash and cash equivalents. Right? How do I do that? By adding these amounts over here. Let's highlight them. Okay, so this plus this plus this will give me my net change, right? And that's the whole purpose of a cash flow statement, is to work out what this net change was. Alright, so that's where is my calculator. Okay, so I take 8780, I minus 91,000 because it's in brackets, and I plus 52,000. Let me just see, yeah. Okay, how much was that? 3220. Wait, let me see. 3220, yes, 220. Okay, but it's a negative change, so it needs to be in brackets. Okay. You'll see now why when we will complete this note, alright? Because you do this portion first and you're just gonna like copy paste basically in there. Okay, so now I've worked out my net change over here. Okay. Now I just need to work out what's my cash at the beginning of the year and my cash at the end of the year, and then I'll be done. Okay, so here's another thing that people do wrong, and then they mess this up when they're so close to the finish line. Right, so you'll see here it's cash and cash equivalents at the beginning and cash at the end, right? So what most people do is they go and look at the balance sheet, cash and cash equivalents, and they just write these balances in there. That is also a big mistake and completely wrong, right? Because part of your cash and cash equivalents is your bank overdraft, and this is something people forget about all the time. The bank overdraft, alright? What this means is at the end of the year, you had a negative balance in your bank account at the beginning of the year. Sorry, because that's beginning. Alright? But you also had 200 Rand in cash with you. So what was your total balance? Right? It will be, at the beginning of the year, it will be your 11,400 minus 11,400 plus the 200, because that's a minus amount. Alright? So what will my balance at the beginning of the year be? So I have an overdraft and cash equivalents. Those are both part of those cash and cash equivalent changes. Alright, don't forget the bank overdraft. So let's work out my balance at the beginning of the year. It's minus, let me just clear this, minus 11,400 plus the 200 that I have in cash, which means I have a negative balance of 11,200. So beginning of the year, 11,200 in brackets because it's a negative, it's an overdraft. Alright, and then at the end of the year I do the same. What did I have? At the end of the year I had a negative 21,540. So let's clear here, minus 21,540. Okay, but I had cash of 300 Rand, which was an inflow. So I had a negative 21,240. Right. And that, when you've done that, you've basically completed your cash flow statement, but now your note is still incomplete. So then you're just going to copy that. Alright. My net change was 3220. It's in brackets. At the beginning of the year was 11,200. And at the end of the year was 21,240. Right, so my total change, my balance was that when I started the year, and I ended the year, my balance was this, which means throughout the year I had a negative spend of 30,220. Alright. And then you can just total these, but it's not necessary. I'm just gonna copy. Yeah. Alright, and then you total those, and it's the same. Come on. Right, and then that is done. The entire cash flow statement is finished. Right, so as you see, there's just like a few little loopholes, but other than that, it's quite easy and straightforward. So, yeah, good luck with the rest of the activities. And if you get stuck, just follow this example and you'll see how to do the cash flow statement.